Good afternoon, everyone. Hey, this is Bruce Marshall from Simpler Trading with the nightly video update for June the 23rd, Wednesday, June 23rd. And we'll start on the S&P here. Take a look at everything. I am actually traveling, so I'm on a laptop and I only have one monitor here. So a little unusual doing at my main office. I have 6 monitors and it's a lot easier to go between screens and all that stuff, but just wanted to throw that out there in case you saw some things going on down here on the taskbar. So anyway, let's jump in here, look at the S&P. So today, if you look at this, it was a pretty tight range here on the S&P. We, actually we probably went up more than this than it really looks like here. It looks like we had some pretty good chop. But in fact, notice down here from the open 31, let's say 31.34, to 31.54. So about 20 points up, and then we just kind of started fading towards the end of the day. This was some update on coronavirus, more cases. There a lot of that going on lately with the market. So expect more of that. We're seeing, some states opening up, and then some more restrictions or different levels of lockdown, I guess, or caution being taken in some places. So again, just expect more of that, because I firmly think that we'll see more of that. Let me switch real quick to the S&P, or excuse me, to the ES. If you didn't see this last night, here on the ES, let me do a 2-day. This gets last night. So again, if you don't watch the futures at night, you probably didn't see this, but look at this big drop here. So we're trading up here at 31.25, and then we're just chopping around. All of a sudden we drop vertically straight down. That's about 60 points, roughly, something like that. Straight down, and then literally straight back up to where we were within, I don't know, what is that? Not very long. Anyway, that was the China deal's off, no, it's not. And so again, kind of expect more things like that as we go. And as we know, this market is very, very, very fickle and can turn on a dime. So, we have been playing this thing to the upside. I'm going to switch back to the S&P. We've been playing this thing to the upside for a long time, and I keep trying to emphasize all the way up as we go. I'm in bullish bear. I think there's a big disconnect between reality and what's going on in the stock market. We know that, and I think it's just a matter of time before all that kind of settles in. And I'll give you an example. Yesterday I read an article saying that once again, that this past month that 30% of people didn't pay their mortgage or their rent. It's actually a little bit more than that, but around 30% either didn't pay at all or made a partial payment, could not pay the mortgage. Then today I read that new mortgage applications are at an 11-year high right now. So things are just not jiving with reality, I don't think. No, I don't want to do that right now, but thank you. So anyway, again, we know this, and we're looking at the S&P, and this thing just keeps trucking along here. This is a 20-day moving average. I continue to suspect we keep going higher here. And what's more amazing, this is the Nasdaq. For the second day in a row, we hit another all-time high in the Nasdaq, and then you turn on the TV and you see riots and statues being torn down and coronavirus everywhere, and China, questionable problems, I guess, arising with, or potential problems arising with China, and yet we're ripping higher in the Nasdaq here. And in fact, let me show you. This is the top 10 on net gain on the Nasdaq. We've got, of course, Apple. Just on fire, Amazon on fire, Booking, Google, Tesla, there's NetEase, some others thrown in here, but just on and on and on. Nasdaq just continues to go. So if you look at this trend, I mean, this is a beautiful chart. Look at that. I mean, we touch base there on the 20-day there, kind of chop around here, touch base there. That's just a perfect looking chart. As comparison over here, it was perfect looking as well for a long time until the rug gets pulled out. So, I'll go ahead and say it on the record here. I think we come back to this 200-day at some point. And, that's a very vague statement, and I know that. I don't know if that's, in a month or in 6 months or a year, or, I don't know how long it takes. And also remember, as this price on the Nasdaq continues to go higher, the 200-day moving average continues to go higher too. So it might not be that exact level. It could be at a higher point if we do indeed continue to go. But I think at some point we probably some more of this news continues to set in. And again, it depends a lot of, a lot of big variables are on the horizon, such as second wave coronavirus. We've got got an election coming up, and again, so I'm looking at my time frame being, say, to the end of the year. All kind of questionable things with China that could go wrong or not, and the Fed. So very as we know, very dicey market. However, it is just working like magic right now, primarily because of the Fed, pushing things. And ironically, we've always taught to not trade on hope, but all I keep reading is, the market is up on hope of economic recovery. So all we're trading on is hope right now, So anyway, and you guys, I've been saying the same thing for a little while. We're going to continue to trade this thing to the upside, with a eye to the downside. I'm very light right now, just doing very strategic trades, and because of that, I don't have to have a lot of hedging on, because I don't have a lot of long positions. And in fact, if you were in the main room, I just closed this trade yesterday in the main room. Everybody got this trade that wanted it. I did a calendar trade. Those have been working very good lately. If my computer will catch up with me. Okay. We did a calendar trade. I closed yesterday for a $4,000 profit. It's up about 4,600. It was a combination of a couple of calendars here that I did. It's been working, those tight trades been working very well. This one, we ended up with 4 separate kind of little entries on here, and we kind of had to move around with the market. But it works. We may end up closing again yesterday for 4,000. It's 4,600 today. But we kind of squeezed pretty much all we can out of it. This expires Friday. But again, that's just an idea of things that are working. These have been working pretty well lately in this market. So if you don't know how to do that type trade, that's something you should look into. And of course, jump in the room, and I'll help you any way that I can. But other than that, again, I'm very light, very happy, because I'm not, if we pull back, that's fine. If we keep going, that's fine. I'm trying to trade this very light, strategically, surgically, I guess. You don't need to swing at every pitch, and in this market, you certainly need to keep powder dry for the what ifs that will certainly come. So that's the way that I'm playing this. Again, keep looking to the upside. There's one caveat here to think about. Now, at the end of June, there is a big rebalancing coming up as far as pension plans, and that could be a very large amount of money. I saw estimates today from $35 billion to $76 billion, and a lot of that money could come out and go into bonds, for example. I just don't know if that is going to be the case, or if people will keep riding this, portfolio managers keep riding this or not. So just be aware of that, especially if you had a lot of long exposure and you have a lot of profit. Just try to protect that. So that's what I got for you today. Keep looking to the upside with the reality that downside is going to come, and it might come very quickly. Just either hedge for it or take profits when you can, and stay light. Keep a lot of cash for the opportunity when it arises. So that's what I've got. Thanks for the time, and I'll see you at the next update. Take care.